Hi, everyone. This is Unrivaled Investing. This time we have a special guest, Brian Feroldi. Thank you, Brian, for being on. The reason why we're excited to have Brian here is not only does he have his own YouTube channel where he's talking with Brian Stoffel on a regular basis, talking about basically breaking down companies in a very intelligent way, saying here's your competitive advantage, what's this business look like. But Brian also recently came out with this really fun book that I've recently gone through myself, which is called "Why Does the Stock Market Go Up?" Brian, do you want to tell? Thanks for being on. Do you want to tell us a little bit about your background?
Yeah, sure, Daniel. Awesome to be here. For those that don't know, Daniel and I have gotten to know each other over the last couple of months because we're both YouTube creators. And whenever I see someone who's subscribed to my channel, it's like this person is also subscribed to Unrivaled Investing. So I think that we share a pretty similar audience. So it's great to be on an interview together. Yeah, my quick story with investing was like most people. I think most people. I was not taught. I did not raised in a house where investing was a part of the lexicon. My father did invest in penny stocks a couple when I was a teenager. So I got some experience with watching him buy stocks that were going up and down like crazy. But I got no education at home about what a business is, what a share is, what a stock is, why they have value, why they go up and down. None of that. That was all foreign to me. When I graduated from college in 2004, my dad did hand me a copy of a very popular book at the time called Rich Dad, Poor Dad, which I know has been a gateway drug, it's called, to like finance for a lot of people. And it absolutely was for me. And looking back, there's a bunch of things in that book I don't agree with now. However,
Sure.
it unlocked a brand new world that I'd never heard of before about things like everyone's in business for themselves. You can build wealth in one generation. The rich think differently about money. They buy assets, which are things that go up in value or produce income, and they avoid liabilities. All those topics, for whatever reason, immediately resonated with me, immediately grasped me, and that just kicked off a never-ending learning binge of me learning about stocks, investing, real estate, personal finance, etc. And that's what I've been doing for the last, say, almost 20 years at this point. So that's how I caught the investment bug.
Got it. And what I liked about your book, going through it is that if it has something for everyone, where if you're a beginner and you've never even looked at a company before and you're not familiar with it, this is a very has very basic, it's welcoming. If you're not familiar with what even a stock is, or how the index average is calculated, what are some of these basic terms? What is the Fed? And so if you don't have any, experience looking there, this could be a great way to start. As you mentioned, this book, you wish it had been written when you had started out. And for the more seasoned hand that's familiar looking at companies, there's a couple of nuggets here and there where you go, wow, that's really thought provoking. I was shooting an email with Brian, last night, saying, hey, I'm curious about this 20-year history with the market. Because you have this really interesting stat, Brian. Why don't you mention it here?
Yeah, it's probably my favorite stat about the S&P 500, and that is if you bought and held the S&P 500 for 20 years, you have made money in real terms, so after accounting for the effects of inflation, 100% of the time. 100% of the time. So, Daniel, when people come up to me in real life and they don't know anything about stocks or investing in any way, it's very common. A very common annotation is to believe that the stock market is just a casino, right? The
Yeah.
stock market is something that you put money into. You hope to sell it at a higher price, maybe later that day, that month, or that year. But if you don't know anything about the stock market, all you see is prices going like this, right? Up, down, up, and it seems random. Um,
Yeah.
and I thought that same thing myself when I first started investing. I was like, I know rich people talk about the stock market, but I don't understand what the relationship between a business and its stock. And until somebody explains it to you, it seems like there's no relationship between a business and its stock at all. So what I would use to counter that, if somebody says, "Oh, the stock market is just gambling," well, I would say, "Well, does does something that goes up 100% of the time over 20-year periods sound like gambling? In the short term, it's absolutely gambling. But the longer you hold for, the higher your odds of making money are. So to me, that's why I love putting money in the market, is because I know if I hold for the right amount of time, that my chances of making money are exceptionally high.
Yeah, I want to get back on this point because I think this will be a good, good conversation to have, because I personally have my own EBGBs about the market right now, where I'm increasingly concerned about it and bearish. But before diving into that aspect about the 20-year, you know successful periods, where if you go through the S&P 500, and I think the S&P 500 was only like technically formed like in the 50s or something like that. But either way,
1957.
if you
Yep.
buy a large basket of US stocks, going back even through the Great Depression over a 20-year period, because you have dividends, because you have fundamental appreciation over time, generally things work out, even if you do have that volatility in terms of valuation on a day-to-day basis. And so going back to the book, before we talk about the question of where's the market going, it hasn't peaked out, and your concerns or my concerns, and maybe you're relieving my concerns. I'd love to hear your thoughts in terms of what are you hoping some of the readers will take away from looking at your reading your book. Why does the market go up? Is it because for a lot of folks, and I think this is a really helpful data point. You and I, we're talking about individual stocks because, in all honesty, like, I like to joke, if I didn't have this YouTube channel to talk about stocks, I'd be talking to myself. And so, like, and so I feel like we're in the same boat here. And so, and you make a really good point that some people love looking at stocks, some people it's completely bores them, and there's a whole different set of options that you can consider. And you lay out all those different options, spelling it out once again for someone that's not familiar with the range of options. The important aspect, as you provide in the book, is to get in the game. So what are that, and that's one of my takeaways from this book, which is, and this is a net positive, like another key aspect from your channel is, let's get people in the game long term, if you can play the game long term. If you're just going to get out on the first thing of panic, first time things go down, that's probably not a good position to be in. And keep in mind, none of this is financial advice. We're sharing the individual things that Brian and I have learned. Brian, so why don't you share what are you personally looking for readers maybe to get out of it, without sharing too much, because they should check out the book themselves.
Well, so I think you bring up an excellent point. People like me and you, we're weirdos. We are super weird. It is weird to look forward to digging into a 10K, to look at an investor presentation, to judge management. I mean, you just said it yourself. I'd be talking to myself if I didn't have this
Yeah.
YouTube channel, right? People in the real world don't care about
Yep.
finance or stocks or have the interest that we do. And I think the people that are watching this on your channel, on my channel, are in that, say, 1% of population that is interested in investing. Like those are our people, right? Those we love you guys. You guys love the details. Like we love them too. However, I just know that in America alone, Daniel, in America alone, there's 100 million people that have money in the markets. A hundred
Well,
million. That could be primarily through a 401k, an IRA, a pension plan, a 403b. They're working with a financial advisor. They have an employee stock purchase plan, etc. That's a lot of people with money in the
yeah.
market. And I just know, if you ask them, if you could sample them and say, why does the stock market go up? Why, when you were born, the stock market was X and now it's 2X, 5X, 10X? Why did that happen? I just know 99% of them don't know the answer. I just know that
Yeah.
because I ask people in my real life, and they don't have a clue. I didn't know myself
Yeah.
until like I started studying investing for like more than 5 years. And after I figured out what is the thing that makes, what's the engine that drives a stock's returns over the long run, it was such an aha moment for me that I was like, well, I wish I knew this when I was in high school, or at least 10 years ago. And I read so many of the books that you have on behind your shelf, right? There's so many wonderful books out there. The Intelligent Investor, The Warren Buffett Way, One Up on Wall Street, The Little Book That Builds Wealth, books by Peter Lynch, by Warren Buffett, by Charlie Munger. They're excellent. But I would just wondered, well, why isn't there just a very simple book that explains to the average person that isn't interested in finance what the market is, how it works, and just gets to the core principles that they need to know so that when the next downturn comes, because it's coming, that
Yeah.
they have conviction to hold on for the long term because they understand the why behind the market.
Yeah. Yeah. That's super helpful. And for a lot of folks, regular viewers know whenever I'm talking about a company, whenever I'm personally looking at it, I always say there are three things that drive a stock. You have effectively the valuation that causes the day-to-day change. You have the three things that can cause a return. So you have valuation, you have fundamentals, earnings, that's a key aspect. That's the magical why. Brian's book does a great job peeling that into further detail, what actually drives that earnings into individual components. And then the last component is dividends slash distributions. And so you look at those three things, and that's ultimately what drives stocks over time. And you need to understand those different components as you think about businesses. As you consider, oh, okay, the valuation that's going to fluctuate. What's the underlying earnings going to look like for this business, or the fundamentals? What's that going to look like longer term? And arguably, we're in a different period now where you know Amazon, one of the largest companies in the world, and it's still not trading at like a 10 times earnings multiple or 20 times earnings multiple. It's still very much people are baking in what is sort of an optimized earnings that they might have in the future.
Mhm.
So it really is a like what's driving this business and the assumptions around it. What's the possibilities there? So Brian, you were talking a minute ago about how over every 20, like this was one of your favorite stats, how over every 20-year period you've had a positive return with looking at the US market. And so my concern, and regular viewers know I've been a little bit concerned about the macro. I called out concerns about the ARC funds in February last year, and saying, hey, here's Michael Burry, he's saying there's huge downside. And Unrivaled Investing Journey subscribers, they know I'm a little bit concerned there as well. And so I'm looking at this and I'm saying, you know what? Having a book come out saying, hey, this is why the stock market goes up. It's either perfect timing or terrible
Yeah, I think
timing.
it's terrible
And so
timing.
and so I want to hear, you know, I want to hear sort of the thoughts on either a devil's advocate view, because there are definitely some markets that haven't worked out.
Mhm,
If you're a Russian, let's say, equity shareholder, you might be permanently impaired.
mhm.
And so I guess the question is, Brian and I are both U.S. citizens. I'm extremely grateful to live in the United States. And so I guess the question is, or one of the questions around this topic is, what do you think has made the U.S. sort of successful in this right? That's made it a compounding machine over this time frame, and why do you think it'll continue in the years ahead?
Excellent questions. Excellent questions. And to be clear, when my book was specifically written about the U.S. stock markets and the S&P 500 in particular. Now, the U.S. is the biggest stock market in the world. It's the most studied. It's the most liquid. It's the most everything, right? So if you're going to choose one, that is the one to look at. But to your point, Daniel. Russian stock market, not the same as the
Yeah,
US. Japan's stock market has largely been essentially flat now for like 30
yeah,
years. So where's that magical 10% return that we're talking about? So I don't claim to be an expert on international stock markets and international returns, although I'm pretty sure the data shows that over long periods of time, most stock markets do go up and
yeah,
not at the same rate as the US. There's been markets that have been positive up below the US. There's others that have been positive and above the
yeah,
US. But to your point about sentiment right now, we're at an interesting point in history, right? It's very interesting what's going on here. Interest rates are on the rise. We're dealing with inflation for the first
yeah,
time in 15 roughly 15 years. China is becoming much more of an economic superpower than the United States. There's a war going on in Russia, right? The so many of the institutions that have been set up that we've depended on over the last 80 years have been rocked. Could that mean that moving forward, that the U.S. stock market in particular could be set up for subpar returns? It's entire
Yeah,
at the same time, valuations are high, right?
yeah,
There's a lot of things that are going on there. That's very possible. I mean, between 2000 and 2010, that was a lost decade in the
yeah,
U.S. Right? You bought if you bought on January 1st, 2000, and you held till January 1st, 2010. You don't have a smile on your face. It was a bad 10-year
yeah,
period. We had to put up with two
yeah,
extreme bear markets from macroeconomic factors, and the valuation largely got compressed over that time. But when I think about the very
yeah,
the very long term, which is what the time period that I'm focused on, um, I'm still bullish. I'm still bullish on the long term
yeah,
potential of humanity for a few reasons. First off, population is still growing, much slower than it has been in the
sure,
past. But the economic prosperity of the growth of the middle class globally is still high. The U.S. is still the innovation center of the world. I mean, and when you think
yeah,
about the number of potential innovations that are out there that I'm interested in, it's boggling. Let me tick off a few innovations that are happening right now. Artificial intelligence,
yeah,
space mining,
yeah,
autonomous vehicles, augmented reality, cannabis, cloud computing, edge computing, geothermal, mRNA, nanotechnology, online learning, iBuying in real estate, plant based meat,
yeah,
smart grid, robotic surgery, space tourism, telepresence, telehealth, wind energy, solar energy, etc. That's just a few of the like dozens of potentially enormous innovations that are happening right now. In fact, I think the next 8 years, next 10 years, I mean, the most disruptive period in history with the number of
yeah,
industries that are going to be impacted on that. Now, whenever innovations come along, there's winners and there's losers, and like
yeah,
some companies, some sectors are going to explode, just like we've seen the internet lead to multi-trillion dollar valuations in companies like Google, Amazon, etc. And some industries are going to implode and just go to zero effectively. But
yeah,
I think net, if you look back at history, that's always been the case. I think productivity has the chance to continue moving higher. I think that, broadly speaking, the global population, the amount of the income per person is going to continue to grow. U.S. companies can continue to expand overseas. So those are the fundamental drivers of long-term value creation in the market. In the short term, absolutely anything could happen. And if you said to me the year is if it was 5 years from now and the stock market was the same price it is today or below, I'd say not all that unsurprising, right? Not
yeah.
not entirely unprecedented, but when I still think about 10, 20, 30-year holding periods, I'm still bullish.
Yeah. Yeah, it's that's the question for me is like how often do you get these periods where, or are we more likely to get those periods where you get the flat return for 10
Hmm.
years because of what we're talking about here where like you look back at like 1981 or something like that, which was the very start or 1982 like the very start of a mega bull
Hmm.
secular market, just decades long run, and you had the exact opposite of where we are today with high rates, high taxes, low indebtedness, and arguably a faster growth rate in terms of the economy, higher inflation, and so it's sort of this or comparable inflation. So you're looking at it sort of like, is it possible that you see that sort of headwind for years and years, and that's my own personal concern. But the things you're calling are saying, hey, you take a longer term view, you focus on those innovative companies, and if you want to bet on continued society growth, continued innovation over time, that's what ultimately owning US stocks are for.
Hmm.
Now I guess my question is, what would you need to see for you to say, what, the thesis is now busted? What are sort of the data points along the way where you start saying, what, maybe it is time to consider either international or something else, and or invest in gold. And I'm not saying like that's what you should do. Like I'm raising this as this is sort of a thought experiment here. Like at what point do you go, you know what, this thesis could be busted. Maybe we are in for a 20-year period where investors get, zero return. Like you've seen in Japan, like you were talking about.
Right. So I
So
think Japan.
let's
I'm not an expert on the Japanese stock market by any means, but I do know that in the late 1980s, I think 89 was the peak year, Japanese valuations were extreme, right? They were
yeah,
like .com level extreme. And I know that Japan, the market in Japan, like the economy is so different than it is in the United States. It's just the workforce is different. And oh, by the way, over those last 30 years, it's been pretty good to live in Japan. Like, yes,
yeah.
the stock market hasn't gone anywhere, but day to day population living, life expectancy is really good. The unemployment rate has been low that entire time. Like, the quality of life continues to improve. So let's throw
Yeah,
that
you got
that
video streaming. I mean,
right.
your life has to be better.
Exactly. Exactly. But to your point, what would cause me to fundamentally switch to being not bullish on the U.S. economy? I would say fundamentally we have some kind of crisis at the government level, especially
Yeah,
with debt. If like the Chinese, if the yuan became the de facto currency of the world versus
mhm,
the U.S., if our population stalled completely and started to go in reverse, that would be a cause for concern. I mean, I personally want immigration to go up in the U.S. because that's been a major way that we've got attracted entrepreneurs to our
yeah,
country. It's helped with net
hundred
population
percent.
growth. And when you look at some economies that are struggling out there, far worse in the U.S., they all have declining populations, right? Because they're
Yeah,
they're not as friendly towards immigration, and that. And then I would see that the U.S. just fundamentally loses its competitive position
yeah,
in the world. China is ascending. China is going to become an economic superpower. Is an economic superpower, and their relevance is likely to grow. The same is true for countries like India. So if I saw that the fundamental competitiveness of U.S. companies declined, was on a permanent decline, and we lacked innovation and we lacked population growth, then my enthusiasm for the U.S. stock market would likely decline. But this is one reason why I like to invest in individual companies, right?
yeah.
I love index fund investing. I have index funds myself. I recommend them to everybody, but I would personally rather put my capital into specific companies playing specific trends as a way to drive my wealth, than rather than just solely rely on the economic flow at the macro level. I think the macro level is still a really really good bet, but this is why I like digging into individual companies, just like you do.
Yeah, this is everything you're saying there totally makes sense to me. I think and that's part of the challenge and uncertainty that folks are going to be dealing with cuz look, China is a rising power, but you look at Ray Dalio's framework where he goes, "Hey, the US overtook Great Britain
Mhm.
as a great power." You know what? Living in Great Britain, it's even though it's no longer the world superpower, it's still great. Your standard of living still way better than
Right.
what it was. You still like I doubt a lot of people in Britain today would be like, oh yeah, I'd much rather live, in the time of Andrew Carnegie and be like, hey, I'm gonna go, make some steel. So I think looking at it, it's a time where even with these challenges, people are excited with the prospect of continued progress, continued innovation. Um, and even if the Chinese economy does take the top spot, you do have some long-term secular drivers with the US to be optimistic about.
And don't
I
forget,
personally
Daniel, that even in the S&P 500, I don't know the exact number, but it's something like 40% of profits, 50% of profits are from overseas. So
Yep,
Apple, for example, the majority of revenue outside the US. Nike, the majority of revenue outside the US. Microsoft, McDonald's,
yep,
right? Yes, they're headquartered in the US, but they're
yep.
international companies that you're
Businesses,
that you're you're
absolutely. And
you're
that's
you're
that's
betting
a
on.
That's a very good
Yep.
point to think about, which is that even if you do have challenges domestically in the US, by finding these companies that can ultimately and ideally compound with a global perspective, a global platform, that gives you, a longer runway to continue. I think the one key aspect that would sort of be the question for me in terms of if the thesis ever gets busted, and I hope it never does, is the question of rule of law. And I think that's the reason why for a lot of people looking at like what happened on January 6th was so sensitive, is like, whoa, could you have, where the effectively a democracy sort of fails, where two parties do no longer accept the results of an outcome. And then like once that happens, like, hey, why can't you have crazy outcomes with the stock market? I mean, you're starting to see politicians on one side say, hey, let's tax capital gains at like 95%.
Right.
That would have like a dramatic impact on stock valuations. So it's a really interesting, but it's good to have a framework where you go, hey, let's focus on the big picture here. Let's focus on what's actually driving stocks long term. We're focused on earnings, what drives earnings. You have a ton of incredible innovations to consider, and you yourself, you call out several of them on your channel. Are there any companies that are top of mind right now where you're thinking, wow, in terms of an uncertain world, you just have massive innovation with these guys to think about?
So it depends on what type of investor you are, right? I love talking about high growth dynamic companies just as much as the next guy. However, the bulk of my capital is in large, stable, predictable, cash flow positive, free cash flow positive, more mature businesses, right? So like Google, I think is still growing exceptionally high and has a very bright
Yeah.
future ahead. Same can be true of all of the FANG stocks. Tesla is actually my number one holding. I didn't intend it to be that way, but the
Wow.
company has been done so well on the public markets that it's grown to become my number one holding. When I think about the future of that company, there's so many positive things going on that I still think the future of that business is very high. So Tesla is like my number one holding, and probably will be for a long time, if assuming things go well for
Yeah.
the business. But I think that company is going to continue to grow its revenue at a, I don't know, 30, 40, 50% clip for the foreseeable future. This
Wow.
is a key point though. I've been a Tesla shareholder for about 10 years, maybe 11 years, something
Wow.
like that, like a long, long, long
That's
time.
great.
Um, if you look back at the long time history of Tesla, it's just like up to the right? It's just like up. There was I think 5 year period where Tesla stock did nothing but go
Yeah.
down. Like it traded sideways and then it went down. Like between 2014 and 2019 or something like that, Tesla went from way overvalued to like one-time sales or something like that during that period. And there were short reports about the company. It wasn't producing profits. It was an incredibly hard company
Well, they
to
nearly went
hold.
bankrupt.
Yes,
Yeah.
right. But then all of a sudden in 2020, like 20 bagged, right? Like it
Yeah.
went from this company's going out of business to this is the best company in the history of the world, right?
Yeah.
And that's why you had these extreme returns. But that just still shows me if you're going to be investing in companies, even dynamic ones like Tesla, you have to be willing to hold for long periods of underperformance and periods when the stocks do nothing but go down, even if the business is improving, right? Every,
That's such an important takeaway. If I personally, if there's one takeaway from this, from this video, I think it's what you just said, Brian. What you're saying is, keep going.
No, it's just, but that's a really hard thing for people to understand. That's a really
Yeah.
hard lesson for people to get. I mean, you ticked it off before, right? Valuation it rules the short term. It rules the short term, right? If you're going to be holding Tesla during that 5 year period, the business was better, 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 better. Revenue up, up, up. Gross profit up, 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 up. The stock went down, right? Because it went from way overvalued to way undervalued. But the business won out in the end. On our channel, whenever we make a bullish call in a company, we put it into our partner's portfolio, just called Stock Card. If you look through there, it looks like a graveyard of terrible investments, right? Everything in there is down 10, 20, 30, 40, 50%. And how could you not look at that and be like, these guys suck? Right? They don't know what they're doing. Everything is down, but that's the valuation changes. That's
Yeah.
the thing that's unpredictable about the market. If you look at 3 years from now, 5 years from now, 10 years from now, I'm very confident that many of those businesses will be up substantially from where they are today. And you have to be willing to endure that short term pain. You have to be willing to look like an idiot in the short term, like we do, in order to get those long term returns.
Yeah, such a key aspect, and I think it's worthwhile to understand. And this once again going to key concept, in your book, why does the stock market go up? is that you can have stocks go down and it's warranted.
Yes.
But you can also have stocks, and oftentimes that'll be the case because, creative destruction. Destruction means there are going to be losers. But you also have situations, and this is why it's so important to follow the fundamentals, which is that as long as the fundamentals are still growing and they're not diluting the heck out of you by issuing a ton of stock to keep the business afloat, then you're focused on what's actually driving the stock. If the stock price is all just valuation, like what Brian's talking about, there could be years of being underwater, years of being an incredibly unpleasant ride. Well, that's why it's so important to say, okay, what's that fundamental picture
Mhm.
that you're looking at, Brian? That's such an important point. And I think even particularly now when the world is considering all these headwinds,
So,
is
Daniel,
to
one of
say,
the
hey, what am I really owning, and are the fundamentals stacking up?
So
You
sorry
have
to
something
interrupt you there.
to.
One of my
No.
favorite studies ever that came out about the stock market was done by J.P. Morgan. It's called The Agony and the Ecstasy. And they
Okay.
looked at the long term history of thousands of publicly traded companies, and they looked at the return distribution of those companies. And it was like my favorite study ever, because for the first time ever, we could all of a sudden get odds, like actual odds, if we're going to be picking stocks, the what to expect. If you start stock picking, right, and you see the research that we do, you would expect us to have like a 90% accuracy rating. Like, look at these guys do all this research on a company, right? They must be right like 80% of the time, 70% of the time, right? If you just took 10 random stocks in the stock market, you can expect that about 6 of them will dramatically underperform the index over time, right? 6 of them
Yeah.
will underperform. Only about 33% of them outperform the market, and
Yeah.
only about 10% of them, 7 to 10%, drive are up so much that they
Yeah.
outperform everything else. So if you were just randomly throwing darts against the wall, you should tell yourself, I'm going to be wrong 60% of the time if I'm average,
Yeah.
right? Think about that. So if,
Yeah.
we, if you pick 10 stocks, you should expect to lose money on about 6 of them. And all you have to do is get that one mega winner in there that makes the whole process worthwhile. So that's really important. When I learned that, I started to score myself differently, right? If
Yeah.
half of the stocks that you buy outperform, you're killing it. You're doing great.
Yeah. 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 It's a really important point, and I think case in point with you talking about owning Tesla for the better part of this past decade, which is that you have one idea. Even if let's say 10 years ago you started with 9 companies that went bust, because Tesla has done so exceptionally well, that's going to offset a lot of
Mhm.
things.
But if you were to just look, if that's all you knew, you would think just got lucky, right? So
Yeah.
investing is just is luck, right? If you didn't own Tesla, or if you didn't own any of your mega winners, your returns would be subpar. That's actually how the index works.
Yeah.
That's how
Works.
the S and
Yeah.
P 500 works. It's like
Yeah.
only a teeny tiny number of companies drive everything, absolutely
Yeah.
everything about the index. You just don't see that, because when you're looking at the index, it gets diluted into just that one number that's up there. But I think that's a really critical point to know if you're going to pick individual businesses the way that we do.
Brian, this was a real delight. Are there any other last takeaways that you want to share?
No, thanks so much for being here. It's so interesting to have my book out there in the wild. It's very much aimed at people that are brand new, right? It's meant for people that know absolutely nothing. I basically wrote it with my mom in mind, right? My mom knows nothing about stocks or investing, and I was like, how could I make a super simple book for her to go from I know nothing to I know enough about the stock market to at least understand how it works. So that's
Well,
the
this
target that was aimed at.
it's great, and for all those investors that are either new to the game, or they want to see these nuggets of wisdom that Brian drops in that book. Once again, check out Why the Stock Market Goes Up by Brian Feroldi. He also has a great YouTube channel, Brian Feroldi. And thanks so much for coming on board.
Awesome to be here, Daniel. Thanks so much for having me.
Thanks so much for watching. Bye.